And today I'll give you guys a beautiful update and a weekly market breakdown for the stock market. So we're going to take a look at the NASDAQ 100, the US30, as well as the S&P 500 and look for the best way to trade the markets going into next week. Now, if you've probably woken up and saw, wow, the stock market has been quite bullish today, well, look, it's probably the end of the line for that bullish momentum. You have to understand that the market will react to any positive news that it can get its hands onto just to get that confidence booster back up in terms of where it is. Now, the question is, what drove the price of the NASDAQ up so high? Well, ladies and gentlemen, it was the revised UOM expectations. Now, if you don't have an idea of what the UOM is, it's the US Michigan inflation expectations. Now, what this does basically is it measures the percentage that consumers expect the price of goods and services to change during the next 12 months. Okay, listen to this. Firstly, you need to understand that consumer prices are the key indicator to drive inflation. When this number comes through lower, it's good for it's bad for the dollar index. It means that they're expecting inflation to lower, and because of that, the stock market tends to react positively to it. So basically what that means is that we know that as inflation goes up, the stock market goes up. As inflation goes up, stock market goes down, and as inflation goes down, the stock market goes up. So today we had this data come out from the US Michigan inflation, and it actually came through lower as expected. Now keep in mind that there are two versions of this data released 2 weeks apart. Now the higher or a higher than expected reading should be taken as a positive for the US dollar, while a lower than expected reading should be taken as a negative for the US dollar. Now you can see that consumers are expecting inflation to come down within the next 12 months because why the consumer expectations has dropped from 5.4 to 5.3, and as a result of that, the stock market tends to benefit from this because this drives the price of the dollar index lower. Now, it's important to understand the following. Now, we also know that Mr. Powell, he came through, testified in front of Congress twice. Now, you should probably remember what I spoke about here, okay, because I done a video on this. Now, apart from the Michigan, consumer expectations, okay, that doesn't mean that much. Yes, you have to understand, investors will cling on to any kind of information to feel that things are going to get better, but that's not the case. Firstly, we know Powell, when he came out and testified, he said that they are committed to bring down inflation. Now, Powell also testified on Thursday, and when Powell testified, he told the U.S. House of Representatives, I was laying and watching this live on YouTube, he told the U.S. House of Representatives Financial Services Committee that the central bank's commitment to bring down the 40-year inflation is unconditional. Okay, that's what he said here. Now, remember, a day earlier, which was on Wednesday, Powell also told the Senate Banking Committee that the Fed was not trying to provoke a recession, but that one was certainly a possibility. Last week, monetary policymakers hiked rates by 75 basis points and signaled another increase of between 50 to 75% basis point at their July meeting. Now, ladies and gentlemen, we are still a long way from when the Fed is going to hike the next interest rate. But just because people feel a certain type of way, which is what we got over here, just because consumers feel that inflation's going to go down in the next 12 months and the NASDAQ is reacting to that, doesn't mean it's going to happen, because the NASDAQ is still due for a massive drop in the future there as well. Now, the next thing that we do also want to look out for is what's known as the consumer confidence. Now, the consumer confidence on the other side, is basically an economic indicator that measures the degree of optimism that consumers have regarding the overall state of the economies, the country's economy, and their own financial situations. Now, the expectation here is that it's going to be higher, negatively higher than expected, but that's also based off investor sentiment. Now, if you take everything that I said into account, firstly, the NASDAQ is trying to play a game or trying to play a little trick over here. But this is basically just a cash grab, and this market is going to continue to fall into next week because Powell had come out and testified in front of Congress and said that he said that we are committed to bring down inflation no matter what it takes. But that's what he said. Now, let's quickly look at the technical data over here. If you start on the NASDAQ on the monthly time frame, now I've spoken about this market when we were sitting at this level, right? I explained to you guys all of the reasons why we can see that pullback before that continuation. And you can check out Sunday's video for that there as well. If you drop down on the weekly time frame, what do we see? Now we can see the NASDAQ had filled this gap, and I again said we can expect this pullback to the 0.382 because that's where the 0.382 had lined up. And if you take a Fibonacci from the high to the low of the impulse, and that is exactly where I said we can expect the market to pull back, and we were buying the NASDAQ left, right, and center this week. Now, it would be very nice to see this week that the market actually does pull back and close below this level, which is kind of what I'm expecting to happen here as well. If you drop down on the daily time frame, what do we see? Now, from a daily perspective, it's now we can see the market over here had printed this massive impulse. After an impulse, you expect a correction before you could potentially see the continuation to the upside. Now, if you take your Fibonacci from the low to the high, you can see that we already have the 0.382 confluence that's lining up with the close of the gap, and we can definitely expect the market to pull back from exactly where it is right now. So yes, we are going to pull back. I'm not sure where this market thinks it's going, but I would like to see something like this, and then before that continuation to the downside there for the NASDAQ100 there as well. Alternatively, if the market does reject this level, then we could potentially see the NASDAQ continue higher before the new data comes out that's going to give us a further verification that we can expect a continuation to the downside. Next up, we do have the US30 over here. US30 is showing similar price action. We can see here from a monthly perspective, the market printed the strong level of resistance, broke above that, tested support twice, and you can see how the market is currently rejecting that level there as well. Now, from a weekly perspective, we can see how the US30 had also just closed or is about to go and fill in that gap, giving us a further confirmation that we can expect this pullback to take place here as well. Now, you can see over here, the market had printed this structural level that it is currently testing over there. Again, I am so certain that we can expect this market to pull back to at least to that level. But what would be good for us to see over here is we would like to see the market dip below this level, then retest, and then continue lower, because that is exactly where I'm at. Now, in terms of where we are now, yes, I expect a pullback in the market as this market is currently way overextended. Also, if you are a retail trader, you probably think that, the dip has started because you're sitting there on a 1 hour time frame thinking that the market had printed 200 green candles, then you think the market is now trading in a bullish market. Now, you can clearly see that we are trading down and the news is still negatively impacting the stock market. So get off your 1 hour time frame, get off those 5-minute time frames and start seeing the market for exactly what it is. Next up, we've got the S&P 500, similar price action. I'm not going to go over this. We can see how the market printed this massive impulse. After an impulse, you expect a correction. Then we can see we do have a 50% pullback, which is exactly what we expect the market to give us. The market is now also currently trading at this level over here that I said the market can pull back to. Now, we are going to trade this the same way, right? The pullback is expected. Yes. From here, we need to monitor price action as well as the fundamental data that's going to get released. A break below this level will give us a clear confirmation that the stock market is ready to continue this bearish momentum. Now, before we go, I would like to know from you guys how your week was, how your trading week was. And that's all from my side. Thank you for your time. And as always, cheers for years.